Good afternoon, traders. This is Christian from Tribeca Trade Group, and today is Monday, October 10th. It is Columbus Day. Pretty light volume today. This is always one of those weird days where the bond market is closed, but the equity market is open. I think things like post offices are closed as well. Bank holiday, but equities trade, and not a lot of movement, I would say, after where we started the day. I'll go through all the price action pretty quickly today because there is just not a lot of outliers, not a lot of special things going on today. So risk disclaimer: everything that we're going through here is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. For the day, SPY was down 70 basis points, almost 1%. The Q's underperformed once again. They've been doing that. Remember, they underperformed last week out of the major indices too. They trailed quite a bit. Even though the overall market was up last week, they did trail. And small caps again. Small caps had some outperformance last week. They outperformed again today, down a little bit more than 0.5%. But again, important to point out there that they were, even though they outperformed, they were down for the day. And then this has been the situation now for a while, and we'll go through these charts. So even though the bond market was closed today, things like bond futures still traded today. TLT, of course, the bond ETFs, they still traded for the day. So again, even though no bond auctions or anything like that, that market was still open. And then of course the international markets are still open. And again, we talk about international markets, especially with what's going on with Europe, as the US does not operate in a vacuum. If something big is going on in the European market or somewhere else, it's going to spill over to the US. So for example, there was something big that happened in the UK. Look at what bond yields did today. They had a decent move. They were up 23 basis points, and this is the 10-year. All of these are the 10-year rate. So again, maybe off your radar if you're just trading single stocks, but this does translate into what the overall market is doing. So we always take a very high level look, and then we drill down to what some of the individual movers are for the day. But I mean, what's been going on here in terms of the inflation data that they've been getting, what the central banks are doing. It's not only driving what is happening in the UK, but the US bond market is going to move based on that as well. It's just how the world works. So up 23 basis points. Again, if you want to look at the 10-year yield, this is what's going on. We're almost back to the highs, and the U.S. So again, this is the United Kingdom, but the U.S. market is very similar to that, right? And if you don't believe me, take a look at what the 10-year is doing, right? And again, we'll bring up the yields, but it's almost the exact same thing, right? Maybe it's to a little bit of a lesser extent, but it's still going up. Also, if you want to look at these rates across the curve, just to see, because again, this is what's driving the market, or one of the things that's been driving the market. 2-year rate is at 4.3. Again, you can go to Treasury Direct. You can get 4.3%. I think that's one of the best trades out there right now, especially if you're doing things like laddering portfolios of bonds, which I'm not going to get into this video. That's outside of this video, but you could do things like laddering your portfolio. So if the rates continue to go higher, you could start to get that yield of 4.3%. Again, remember, whenever you buy a bond directly, whether it's directly or not, you do have to think about the maturity, which is 2 years away. And if you need to hold that, and you have to think about whether you want to hold that, because there may be some penalty, whether it being that the price of the bond could go down if interest rates continue to go higher, or it could be a penalty for getting out of a bond before the 2 years. But I think it's really nice to be able to get that yield at this point, for something right now, considering that there's not a lot of places where you can get guaranteed money like that. So 4.3%. So that's one of the things, the reason why I'm spending a couple minutes there, because there really wasn't a lot of interesting things that went on today. The breadth continues to be very weak. We are not seeing buyers come back into this market. So it's just a game of patience right now. And, and how to trade this market right now. It's mainly just understanding that you need to have patience if you're playing things on the long side. If you're doing things on the short side, sure, there's some opportunities there. But as you saw in the middle of the day, just any type of good news at this point is probably going to rally the market decently. This market is there's a lot of bad news baked into this market, in my opinion. Of course, things could get worse. We've certainly seen that with other bigger corrections, but for the most part, I think there's a lot of bad news out there. So, Brainerd made some comments, or Russia made some comments that made the market go up in the middle of the day. But there wasn't really much follow through from that, because there isn't really anything majorly that has changed so far in either one of those situations, either the war that's going on in Europe or the what's going on with the central banks. So there you have it. The Dow was down. Dow had 17 decliners, 13 advancers. S&P had 311 decliners, 189 advancing, and the Nasdaq 1652 declining, and just about 1100 advancing. But again, you could see this is what I refer to as nasty breath. When you see all red here on the bottom of your screen, right? What's the difference between looking at the advancers versus decliners? Well, we're looking at volume associated with the advancers and decliners, and the more negative it gets, just the more heavy volume it is in some of those declining names. All right, so that's one theme. Another theme that we talked about was bonds, because ZB, the 30-year bond, was down 1% today, and again, it's another decent move. And we did take out the lows. So, we had this bounce about a week or so ago. The bond market has been doing a very good job, without getting any hate mail or anything like that. The bond market is called smart money because it will give you a bit better signals in what's going. It's a bigger market than equities is, and it will give you some really good signals. For example, right, this whole thing that we've seen, going back to what we saw in equities, right, this started to kind of fall down first. And even though we saw this bounce in here, there was never any bounce in the bonds. And that kind of told the story. Rates going higher, headwind for equities. So here was a little bit of a bounce in a downtrend, but we're right back at the lows here for bonds. So again, I'm spending more time here because this is what's important in this market. The VIX 3250 I could put in here. So not quite as high as 33, but again, with rates going up and the dollar, which we'll talk about too, the VIX is very, very heightened right now. And I even wanted to put on a position at the end of the day, and I'm like, really, there's no reason to at this point. We got to get out of this, we got to start doing something different in this market than just, every day coming in and seeing breath is bad. Rates are going higher. The dollar is going higher. This is not a place to really put work, for me anyway, to put a lot of money to work, other than, putting on some starter positions, maybe long and short, and kind of going from there. So here's where we are with the dollar. Another big day up here, up 40 basis points. Again, what does that mean? Bonds, rates going higher, as well as the dollar. It's headwinds, right? And we're very close to taking out the lows at this point. We did, going back to where we were middle of the week last week, we were inside value for the month of October. We were pushing into the 20-day moving average. You could see how this unfolded towards the end of last week. We're back below all these moving averages again, the 5, the 20, the 50, the 200, any moving average at this point, we're under it. So what does that translate to? Downtrend, okay? And we're also below, now we're decently back below the October value area. So there's not much going on here that is positive VPOC here at 3556, which would be the next downside. We came very close to taking that out, but we didn't. So that could be the next downside target if you're looking for one. And looking at NASDAQ, right, that did take out the intraday lows, and it looks like we do have a new closing low for NASDAQ 100 futures. Right, so again, new lows for that. We didn't get that in IWM. IWM, like I said in the beginning of this video, continues to act a little bit stronger, but still, there's nothing to get excited about here either, as price is also below the 5-period moving average, also below the value area. So what does this mean? Patience. Try not to get burned out in this market. We've talked about this before. Bear markets can wear you out. Just don't get worn out in this market. And here was my trading blotter for the day. Some good trades, some bad trades. LPLA, which was a name that I added last week on the recheck back into the top of value. This worked. I got a target right in the beginning of the day in this at 246, and that's how this market is. You have to have alerts out and pay attention to where things are around the open, because sometimes that's the highest price that you'll get. I tried to get into a little bit of CEIX. I had some Valero that I had from last week. I stopped myself out of those trades. Right now, if you listen to my video from Saturday, I talk about 4 different trades and how we don't want number 4. Right? We're happy to take number 1, number 2. But there's going to be some number 3 trades, and what we don't want is number 4. If you don't know what I'm referring to, number 1, you could have a small winner. Number 2, a big winner. Right? Number 3, a small loser, and number 4, a big loser. And as I said, we don't want number 4. Those are the 4 types of trades. That's how it works. Right? So Valero did not hold where I needed it to, which was 113.79, and it actually closed on its lows. CEIX, which is a coal name, you could see that almost took out that virgin point of control, which is what I was aiming for. Got very close to it, but did not take it out. Interesting, considering that we're talking about energy. Look at what crude did today, right? So crude took out this virgin point of control on Friday, big candle up, but starting to retrace that move down 2%. I wouldn't be surprised if we start to break back below here. I also wouldn't be surprised if we found some support in here. Nat gas I thought was interesting too. That is back below the 200-day moving average, right? So we're testing that again. The more times you test something, right, perhaps that you might see a break of that eventually, if you keep testing either support, resistance, and right back to where we were. Again, a little bit of a higher low so far, but I think this looks vulnerable to me. All right. I definitely had a couple nice trades in here too, besides the LPLA. This AMLX has been acting very well since it had this secondary new 52-week high, I believe, right? For AMLX. And then I keep wanting to call this Dendron. It's Denbury. If you watch my video on Saturday, right around minute 30 of that video, I talked about how I was trading this one, and I took a couple targets in this last week, and I specifically said I'm holding for some M&A activity because there's rumors with this name. There's also been some option positioning in this one. So this one was really nice, right? So Denbury down in here, I think I took another target in here at 103, and this was just last week. I paid just under $91 last week, and I'm just holding the last portion of the position just in case we do get the actual deal. If we don't, no big deal. It's only the last 5% of the position, and that's it. The other trade that I had on, and I'll try to keep this on. Which is short Qs via SQQQ, right? 3 times short. I will continue to have that on as long as price is below the 5-period moving average. Now, I did take a bunch of targets in this. I wanted to add this back. I didn't for now. So if we're strong tomorrow, right? I took a target at 62. I paid 57 for this. So that's not bad. And I did add a little bit of exposure in what's known as a call fly. In case that, the big event for this week, or big events, are going to be in the middle of this week. Here's the economic calendar. Everybody's going to have their eyes, unfortunately, on this report, which is the CPI report. That's Thursday. Keep in mind, it's usually the day after CPI that we get PPI, but I wonder if it has something to do with, because of the bank holiday this week. But we actually get PPI on Wednesday, right? And then we get CPI on Thursday. Nevertheless, everybody will be looking at this number because that's the only number that people seem to care about these days is the CPI report. And then also the following day, we get retail sales. Right. And then the other thing that we're going to start to have to talk about too, we know that we've had a bunch of pre-releases, but we're also going to get Pepsi. That's tomorrow. And then we'll start to get the bank earnings. There was a decent put buyer in Fastenal today. So this name, it's an industrial name. I think a lot of the industrials are vulnerable because of the stronger dollar. So watch 45.82. And this is decent sized put buyer. It appeared in that name. And then of course we'll get all the banks with JP Morgan starting on the 14th. All right, guys, that's it for today's video. Have a great night. See you tomorrow.